Good evening, guys. Welcome back to today's class. I'm happy to see you all today. All right, let me connect to your chat box. Just give me a moment. All right, I'm just connecting it. I hope you guys had a great weekend. Yeah. All right, I just connected. Fine, then if you have any questions too, you can post me there. Since the last class you guys were asking for MCQs, I think one of the student was keep on asking for MCQs. So even we were keep on talking for the last 2 to 3 classes, I believe. Correct. So I thought, okay, let me put some MCQs so that you will get an idea. Or I mean, here randomly I have taken because I have the question bank with me. So from there, I just picked up the questions which is related to your accounting syllabus. All right. So, I mean, I have taken around some 15 to 16 questions. So we'll see one by one. Then if you have any doubts in the questions or how to solve that, because it includes all the chapters. It's not only related to the basic stuffs. The question is across the chapters. You're getting it? So you might have an idea, or it will help you to read those chapters in that angle. You're getting it? I think still guys are not yet joined. Let me see. I'm not seeing anyone yet. I think yes, people joined, I guess. If you're there too, then we can start. I'll start with the questions. Because since it is an MCQ, I want your participation there. So that's the reason I'm just waiting. All right. And before moving on to the MCQs, though it is in the last slide, let me take you through the last slide first. Just a minute. All right. Yes. Again. Now, since I'm not moving to the MCQ right now, because last class we were talking about the financial statements. What could be the financial statements? That is what we have seen. So in that we studied that it has balance sheet, P&L, cash flow, and then notes to accounts. We have seen that. And I told you everything. It is not like your college, it's not like your school, how you prepare the balance sheet. It has a format, and this format is prescribed by Companies Act 2013 in the Schedule 3. So Schedule 3 prescribes the format, how it has to be prepared. And here you can see the format. Always it has to be a comparative statement. Comparative statement in the sense, every year you will prepare the balance sheet that discloses information for 2 years. That is, one is the current financial year. One is the current financial year and another is the previous financial year. See, if you see here, figures as at the end of the current reporting period and previous reporting period. Usually in India, it would be April to March. Okay. So suppose, say for example, I am preparing now, you are in the financial year 22-23. Now, when you are preparing balance sheet for this year, this column will always talk about 22-23, that is the current year, and this column will talk about 21-22. You are getting it? And how it looks: balance sheet, name of the company, and balance sheet as at. You remember I said that it will be like this, and you have to whether which currency it is reported in. Usually it will be in INR, and you have to tell whether it is in lakhs. Now this year they amended that it has to be rounded off to near hundreds. Like, you know, if it is suppose share capital is say 1 lakh 2,000 or 1 lakh 25,000, Now it should be reported as 1 lakh nearest. If it is 1,51,000, it will be reported as 2 lakhs. So just you have to put it in that fashion. No need to give the entire figure there. You're getting it? So rounded off. It will be rounded off. So as I said, first it would be equities and liabilities, and under that first thing would be what? Shareholders fund. So under that you have that share capital. Here you will be having equity preference. You won't give that bifurcation on the face of the balance sheet. Rather, here can you see this column? This column I will mark the notes ka number. Refer note 3, refer note 4, refer note 5, refer note 6. I will put like this. So the reader will go back to note 3 and he will come to know, okay, share capital, if I put 1,25,000, how much is equity? How much is preference? How much is, what is a paid up capital? All those information, who are the shareholders, who's holding the more than 5% of the shares in the company, who are all the beneficial owners, everything he will come to know. You're getting it? So first, if you see shareholders funds, under that share application money pending allotment, this should have a separate disclosure. Both, these two things are shareholders ka things only, but under shareholders fund, you have share capital, reserves and surplus. Reserves and surplus means all reserves and surplus. General reserve, free reserve, securities premium, capital redemption reserve, debenture redemption reserve, any reserve, anything what you kept it. So all those reserves and surplus will be coming under this particular heading. Third one, money received against any share warrants. You're getting it? And the second heading, major heading is share application money pending allotment. This would be, you have received money from the public but yet to be allotted. Shares are yet to be allotted. See, when you read your Companies Act, you would have come across first, how you collect the money from the people. First, you will issue the prospectus and offer letter. So people will be buying. So there will be bifurcation, subscription money, allotment money, first call, second call, or whatever it is. Now, what will you do? The people will apply through that form. It is like how you apply for anything. Anything you buy an application form, you fill that form and you will pay the fees and you will give that form and you will wait for the admission in a college or wherever it is. The same way for a company also, you will be buying that form along with the prospectus. You will be filling in all the information, and then nowadays it is online, so don't worry. I'm saying how that practically happens. You fill all those things and you deposit that money. They will tell you one bank account number, so you will deposit that money. So that money, what happens? Suppose that issue is happening on, say, 15th of March or say 19th of March 23. Now please understand here, I have a time limit. Within 15 days, within 30 days, I have to allot these shares. I have to check whether I have received 95% of subscription or not. If not, I have to refund that money. So those things will be coming under Companies Act. So I have time limit. I means company. Company have the time limit to allot the shares. Maximum 30 days, guys, not more than that. Remember. So now they have that time. But as on 31st March, still I didn't allot yet. I have to allot, allot shares to the subscribers, but as on 31st March, that money was kept pending in that particular bank account. Now, where will I show that? Because still I didn't issue the shares, so they are not my shareholders, and it is, it's a kind of thing. If I'm not allotting, I have to refund it back. So it is my liability, but I can't give the name as a liability. You're getting it? So what they have done, we will give a separate disclosure, that is share application money pending allotment. So second disclosure, second item in your balance sheet would be this. Third item would be, guys, you cannot change this format. Please remember, ma'am, first current liability, second I will put non-current liability. No way. You cannot change that. Ma'am, first I will put liability. Ma'am, second I will put shareholders fund. No. No. This format has to be followed. You cannot change any of these format because it is prescribed in, again and again, time and again I'm saying, this is prescribed in Schedule 3 of Companies Act 2013. You're getting it? It is unlike your old school ka accounts and college ka accounts. Please remember, this is prepared as per Companies Act. All right, and this format is applicable only for the corporates. Since you are studying SEBI, we are limiting ourselves only to the corporates. Now, third one would be non-current. Under non-current, all long-term liabilities would be coming in. You are borrowing secured or non-secured, long-term any other long-term liabilities, guys, whatever it could be, long-term provisions, everything, whatever is long-term, that will be coming here. Next, fourth heading would be current liabilities. Under current means short term, which you will be paying within a year's time, which is in the near future, maybe a year, maximum a year, not more than that. You're getting it? So all those things will be coming under current liabilities. Now, this is done. Summation total will be coming up here. Next one, assets down. I told you it will be vertical format, not in the T format. It will be vertical format. So now assets. Assets, again, we have two bifurcation. One is non-current and current. So under non-current assets, you have fixed assets here. All right, here we call that as tangible assets, intangible assets, WIP, and all those things. Non-current, long-term investments and long-term loans and advances, anything which is long-term asset, which will give you benefit for so many years, more than a year, then that would be coming under this particular heading, non-current asset. You're getting it? Next one is current asset. Current asset means which will give you benefit only for a shorter period of time, maybe a year, maximum a year. Okay, maximum would be a year, 1 year. So all those things will be coming under current assets. Now, summation total, if you do this total and the liabilities total will match. And this one should be presented for how many years? 2 years always. If this is the first year of the company, then only 1 year will be coming in. And in the notes to account, see here, I have to give this line. Obviously, I have to give this line. Please refer to the notes for the significant accounting policies, and for the other informations, I have to give it in the balance sheet. So you have in that notes, I have to tell this is the first year of operation for the company. Hence, only 1 year has been reported. You have to tell that. And in additional notes also, you will be saying this is the second year, third year. You will be giving that info to the reader. You're getting it? This is how your balance sheet looks. This is your P&L. I think it is so small, I guess. Please zoom in because I don't have space. I wanted to put it in a single sheet. All right. This is how it looks. Statement of P&L, name of the company, profit and loss statement for the year ended, I will put. Again, there will be two reporting period. First one, it would be revenue from operation. What is your major revenue? That you will be parking it here. And again, notes you will put. Second one, any other revenue you have, that you will do here. And whatever the summation, that would be total revenue. If you see expenses, you cannot put all your expenses here. In your +2 or in your college or in your +1, you would have put in your P&L, debit side, you will put advertisement, salary, blah, 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 all those things. You can't put all those things here. See the heading for the expenses. First one, and the format you cannot change. Order, I'm saying order. First one, cost of material consumed. You're getting it? First one would be for the stock. If you are a manufacturing company, then this one will be coming in. Manufacturing, or if you are in a retail, you are in a retail in the sense buying and selling of goods. Okay, so if you are there, then this portion will be coming in. Cost, material consumed, stock in trade, all those things. Changes in the inventories will come. Second one would be employee cost. That is employee benefits expense. You are getting it? Third one, finance cost. Fourth one, depreciation. Fifth one, other expenses. Other expenses is the major junk where you will park all your expenses. Only 4 heads, guys. Remember, one is material, employee, finance, depreciation, other. You are getting it? Only this much will be, this material will be coming only for, not for all the companies. Wherever it is applicable, only there it will come. Otherwise, it won't. You are getting it? After that, what will happen? Revenue minus expense, you will be having profit before exceptional. These things you no need to worry about it because for your syllabus, nothing much on that. It will be PBT, profit before tax. If you have any tax minus that, then that will be profit after tax. That is a final tax. You are getting it. So many other items, no need for you, no need to break your head. For you, we'll keep it simple. PBT, after taxes, it will be PAT or EAT, earnings after tax, earnings before tax, earnings after tax. You're getting it. Now what you have to disclose all this info also. You have to show EPS in the statement of P&L. You have to disclose EPS there. Earnings per equity share. Ma'am, what is EPS, ma'am? You will study that in ratio analysis. You will be having this. You're getting it. I will explain this when I go to ratio analysis. Yeah. So earnings per share. These things should be disclosed in your P&L. See here also I have written that note. See the accompanying notes to the financial statement. This is how your P&L and your balance sheet will be prepared for any company. There won't be any changes. You're getting it because this format is prescribed by Companies Act. You cannot change the order also. Sorry, I poked my eye. Yeah, understood now? Yes. So again, I'll go back to your MCQs. Students were asking for MCQs. So I prepared, but today nobody came, I guess. So that's okay. Let me do it. Once you guys are viewing the videos, you can see that. Next time onwards, I will not do MCQs if you guys are not, just a minute. Am I, check your network connection. Is it 1 minute? Shucks. Am I live? Is it streaming? It's coming. Check your network connection. Why? I think yes. Am I live? I believe I'm live, I guess. Let me check. 1 minute. All right. I don't know. I think I am live. I think internet connection has been restored, I believe. All right. We'll go with the questions now. All right. Now, first one. So one of the following, guys, again, I'm telling you, these MCQs is random and it is related to your syllabus. So I'm doing it. One of the following will not result in cash flow. So the question is, which one will not impact your cash balances? That is the question. Options are sale of asset, purchase of asset, issue of shares, redemption of shares, loss on sale of assets. Remember here, this question relates to your cash flow statement. Okay, there is a syllabus called cash flow. There is a chapter called cash flow. So in that, this is related to that. Here, sale of assets. Ma'am, loss of sale of asset is a expense. No, it is a loss. No, we will be parking it to P&L. No. How come it is not impacting cash? Of course, it will not impact your cash. Cash balance will not be impacted. Purchase though you are paying money and yes, cash balance will get reduced. Sale though you are selling it, yes, cash is coming in. So it will increase the cash. You're getting it. But that loss is nothing but this difference between these two. So literally meaning it is not impacting your cash there. Please understand. So that is what we are seeing here. So will it result in cash? No, it is a non-cash item. Loss on sale of asset is a non-cash item. Okay, ma'am, why are you telling this? Why I am telling this is when you are preparing cash flow statement via indirect method, there you have to add back, you have to adjust for all these non-cash items. Depreciation is a non-cash item, you have to adjust for it. Provisions, all these things are non-cash item, you have to adjust for that. You're getting it? So all those non-cash items should be adjusted in your cash flow statement to arrive what is your net cash inflow or outflow from operational activities, because cash flow has three headings. One is operational, investment, and financing. So you need to find out net cash flow from operational, investment, and activity. If you sum up all these things with your opening balance, you will arrive at your closing balance that should match with your balance sheet ka figure. Correct na? This is how cash flow will be prepared. Right. So while preparing operational activity via indirect method, you will be coming up from net profit. Correct. Net profit after taxes. So when you're taking that, you will add back. You will adjust for all of your non-cash items, non-operational items, you will add back. So in that, one of the item would be loss on sale of asset. You're getting it? Second one, refund of income tax received will be considered under where? Guys, please understand, many students will think that income tax received is, what is it, ma'am? It is not my operational, it is not, what is it question? Please understand, when you prepare your cash flow from operations via indirect method, you will be reducing income tax paid. You will not reduce provision, you will not do, you will reduce only whatever has been paid. But whenever it has been refunded, obviously you have to add back, na? So where you will do it is operating activity, you will be doing it. So the answer here is, it is the funds from operating activity. It will be added there. You're getting it? Next, goodwill purchased for rupees 50,000. What is it? So here the options are cash inflow from operations, cash inflows from investing, cash outflow from investing, cash outflow from financing, cash inflow from financing. So please understand, goodwill is an asset. So whenever you purchase an asset, it is an what activity? It is an investing activity. You're getting it? So let me erase the link. All right. So it is an investment. Whenever you purchase an asset, it is an investment, because by that asset you are going to generate revenue. Correct na? So that is an investment activity. So now when you purchase it, what is happening to your cash? Literally, cash is going out. So it is a cash outflow. So any purchase of an asset will result in the outflow of cash, and it will be shown under investment activity. You're getting it? So it is cash outflow from investment activity. Next one, in case of a financial institution, acceptance of deposits will be treated under. Please understand why these type of questions are coming in is, cash flow is prepared based on your nature of business, because there are three activities I said: financing, operation, financing, investment, and financing. So here operations, all these things is depending upon your nature of business. Please remember that. Yeah. All right. Please remember that all these things. Why? Because suppose I am a software company. Okay, I am a software company, and I make an deposit in the bank. All right, I deposit in the bank, say 1 crore rupees. I put a deposit in the bank. For me, making a deposit, keeping the amount in the deposit is not everyday activity. It is an asset to me. Okay, so it will be coming under investment. You're getting it? Whereas if I am a financial institution, or suppose say if I am a software company, I borrow money. That is my liability. That I am outsourcing my funds. So obviously it is a financing activity for me. But suppose I am a banking institution, I borrow money, or I am lending money, or I am taking deposit is nothing but borrowing, no, for me. Correct na? I am accepting what is it? It is my operational activity na. So it is my very nature of it, nature of my business. So based upon your business, your activities will be, it is, there is no thumb rule that if this item will be treated as, investing, this item will be treated as. There are certain cases, But these kind of acceptance of deposits, investment activities, all these things, receiving of dividends. Suppose I am an investment company, I am a mutual fund company, AMC, asset management company. For me, dividend received is a regular income. But whereas as a software company like Infosys or somebody, for them dividend received is a different scenario. It is not their everyday routine business of receiving dividend, no. But for an AMC, but for a investment company or for a stockbroker, receiving dividend is a everyday activity. You're getting it? It is the very nature of their business. So your business determines the item where it should be parked, whether it is under operational or under investment or under financing. This one you will study under your cash flow. You're getting it? So the answer here is option A, cash flow from inflow from operations. You're getting it? Next one. Converting debentures into equity will result in. Now again, it is why it is why how it is related to cash flow, ma'am, or whether it is there any cash impact. The answer is no. It is a non-cash item again, because so far I was having a debentures in the name of debentures. Now I'm just going to convert that into an equity shares where it will not result in any increment in the cash. So obviously it is just a mere name change. As per my agreed terms, I have to convert the debentures into equity. I may have agreed to the debenture holders after a certain point of time that would have been converted into my equity shares. So as per that term, I'm converting it. So here there is no cash impact. So it's a non-cash item. You're getting it? Next one, sixth question, if you see current ratio, ma'am, what is it, ma'am? Ratio and all they are talking. It is ratio analysis. This chapter is all about your ratio analysis. Current ratio is 2.5 and liability is 25 lakhs and the company has dash worth of current assets to meet its liability. Now, please understand, ratio analysis is a chapter where you have so many mathematical formulas. We have if I want to divide that based on functionality, I can say 5 functionalities. I can say like solvency, liquidity, market ratios, and then future prospects ratios. I can say if I want to put it in the traditional method, I can say three kinds of ratios: balance sheet ratios, P&L income statement ratios, and interstatement ratios. Basically, these ratios are derived from the inputs given from your financial statement, and this helps the reader to analyze various prospects or various aspects of the company as a whole, whether to invest or not. So current ratio comes under the balance sheet ratios and it is under the liquidity ratio. Yeah, and the formula for current ratio is current asset divided by current liability. So these type of questions you can do only when you remember or when you know the formulas for various ratios. Good evening, Eva. Good evening. That's okay. But since you guys asked for MCQs, I have given the MCQs now. All right. Hope you guys found this useful. All right. Now coming back. So current ratio, so please remember, ratio analysis can be done only when you are good with your formulas and interpretations. See, under ratio analysis, maybe there can be two kinds of or two varieties of questions that may be asked. One should be based on the formula and the other should be based on your interpretation. You're getting it? Because guys, see, understand here, it is not only mathematics, A plus B, that you put this is the answer. So what you are going to get, what your Satyanarayan, all right, is this phase 1 or 2 level questions? I didn't divide anything of that sort. Since guys were asking for a few things, so I have taken the questions from my question bank where I prepared for this SEBI exams. So it is a mixture, you can say. There is no bifurcation here. Everything will be concept oriented. Yeah. Now coming back, so under ratio analysis, as I said, one should be on based on the formula, second should be based on your interpretation. Now when we talk about interpretation, please understand formula. If you remember formula, you will solve the formula oriented question. But when you there is one spam, I believe. I'll just tell them to remove the spam. I told them to remove the spam. All right. Now coming back. Yeah. So when we talk about interpretation, you have to give that answer. Say for example, now they will say current ratio is at 0.5. Now what is that? Whether the company is very much liquid, whether the company is an insolvent or the company. You have to answer that. You're getting it here. Just because you arrive at the answer, your question stops. No. Your purpose of arriving answer in ratio analysis is to understand the company. If I say that current ratio is say 2.5, then I am very much, you're getting it, I am very much, good to, what I can say, very much liquid in position, I can say. I can meet all my current liabilities. I don't need to worry about it. Guys, current means what? Within a year's time. So what they are saying, I'll give you a classic example. Suppose you will be having a house. You would have purchased a house worth of say 1 crore. Okay, your monthly income is say per month your income is say 1.5 lakhs or 2 lakhs you keep, and you purchased a house worth of 1 crore and you are paying an EMI of 1.3 lakhs every month. Okay, and apart from every expenses, right? So if I see you from outside, I say, wow, 1 crore house, yeah, bindas. I'll say no. But in the month end, you might be feeling, oh, I don't have paisa in my account. I have to use my credit card. We feel that pressure. It happens in all families. Correct? No. Correct. So it happens. So what is that called? That is called liquidity problem. You have a long-term asset. That 1 crore worth asset is there. If you want 5,000 rupees to be paid to a doctor now, can you sell that house and you pay 5,000? No, right? You don't have paisa in your account. You don't have paisa in your account. Now, what is it? Your liquid position is very bad. You are not able to meet your current liability. You may be having a crore worth of asset, Baba. Talk now. Do you have paisa? Now your liquid position is very bad. So you have to improve. Correct, na? Your bank will see that. When you go for a housing loan, they will say, okay, fine, do you have any other loans? You may say, sir, I have a land in my native, sir. I have that, sir. I have They will say, Baba, see, wait, you have a car loan. You have taken another personal loan. You have another housing loan going on. So if I take your monthly pay, even if you are a crorepati, if you add up all those assets, they will ask your pay slip, last 6 months pay slip, last 6 months bank statement. Do you know why? They will do this calculation, whether will you be able to pay their EMI. Baba, that is at the end. When you didn't pay, they can come and seize your assets, they can sell it, but that is not profitable for the bank. That is not profitable for the bank. Correct? No. They need revenue. Na? Their main revenue is your interest portion. Na? Monthly payments. No. So that's the reason they are asking for your 6 months pay slip. So that current ratio, bank will do that. He has a monthly income of say 2.5. Out of that, all his other EMIs, everything is going. His balance amount he is left with is say 1.2, and his monthly expenses. That's the reason they are asking your bank statement. You're getting it? And your credit cards, if you have credit card, they will pull out all the info. Yeah, so they'll say, okay, he's spending around out of 1.2, he's spending around say 50 to 60K. Now he will be left with only this much amount. So only to that extent we can lend loan where he can pay the EMI. Yes, of course, yes. Of course, yes. That is how it works. Go to a, I'm not talking about this without any document we will be giving you loan of 2 lakhs, please. I'm not talking about those scams. Those are all scams. Don't fall for that. You're getting it? Those are all scams. I'm not talking about that. I'm talking about a literal finance company like banks. So there, what they are checking? Your liquidity. Your liquidity. Correct. So which one will help you to understand that? Current ratio will help you. For a company, I may say, wow, great company. Yeah, they have so much building factory. Right now, do they have paisa to pay the salary for the factory workers? Now it is 30th. Now it is 30th. See, I'll tell you, even we are, I already told you, I am in a fintech company, I told you. Okay, so we have 800 people working in our company. So what I do is, now day after tomorrow, we need to disperse the salary. I'll be checking my account, bank balance, I'll be checking. If not, I have to redeem my funds. I have to keep my liquid funds here. Okay, we are invested by various venture capitalists. I mean, it is I don't want to name it. If most of you guys know, it is a very famous venture capitalist firm. They have invested in our firm, so in our company. So I have funds. I have funds, but it is in the form of mutual funds. It is in the form of FDs. It is in the form of other investments, because I cannot keep that so much funds idle in my current account or savings account. That fund should earn revenue. Correct. So I have to keep it. So yesterday, today I asked the HR how many people are there, and then we prepared the payroll today. So today finally we arrived the figures. Okay, I need so much of funds now. I need to meet the salary payment. Whether do I have the capability or not? That is the question there. Are you getting the point? I might own a own building there where 800 people can sit. I have a land, all those things secondary. I cannot sell that to pay my salaries right now. You're getting it? So current ratio helps me to understand that. So this is what interpretation is. This is how the questions will be. Second type of questions will be the interpretation. You're getting it? Now we'll go with the formula. So current ratio, the formula is current assets by current liability. So here, I don't know current asset. They are asking what would be your current asset. How much would be your current asset? So let it be current asset be X divided by current liability is equal to 2.5. The answer they have given. So CA divided by 25 lakhs is equal to 2.5 though. Then CA should be how much? 2.5 into 25 lakhs. Correct. 50.5 to another 62 lakh 50,000 would be your answer. You're getting it? I hope you got that. Yes. Next one is, which of the following ratio will be used by the lenders while giving loans? This is what I was talking about. Yeah, this is what. So now, ma'am, how do I know all these things? Ma'am, when you study ratio analysis, these things you will come across. In our notes also we have given. If you see the Oliveboard notes also, and we given interpretation also, how it would be, where it will be used, what you should do with this ratio. Everything we have given there. You can have a look at it. You're getting it if you want. Or yeah. So now here what they will see, out of the options given, you have to tell me. So PE ratio, it is related to your market price of the share. Asset turnover ratio, it is related to your how much the assets, how much you are using the assets to generate revenue. The fourth one, retention ratio, out of the profits earned, how much you are keeping it for yourself in the company. All right, last one, debtors turnover ratio. It talks about how many times you are collecting, how many times your receivables are coming in, reducing. You're getting it? That was called debtors turnover. So then left with what? Debt service coverage ratio. So this ratio helps the people, the lender. See here, basically the formula, you'll see that when I go to ratio analysis, here what they will do is they'll find out a relationship between your total interest. If I give you the loan, my total interest payment should be this much. You're getting it? Fixed interest payment should be this much. So what is your earning? So with that, I'll make this is what I explained earlier. You're getting it? Banks will do this because I am very much looking into your monthly payments, Baba. After you didn't pay for, you have become a defaulter, coming issuing a notice, coming and taking your asset, seizing your asset, selling it, taking the money. It's a pain. It's a pain for the lender. Understand? He will lose interest on that because the money what he lends you is not his money. He has to pay to the depositor, na. Are you getting it? 6 months you defaulted. But that 6 months he has to pay, no. For him the money working capital will increase, no. You are getting it. So he will be very much interested in your monthly payments rather than your final settlement. You are getting it. So for that, which ratio he will be using it as debt service coverage ratio. Have you guys, just tell me, you guys are aware of these things or not? Means in the sense these terminologies I'm asking. Are you guys aware of this? These terminologies, let me know. No answer from your end? Why so? Okay, let me proceed. You put your, I think there is some time lag in the, in the lecture delivery, I believe. All right, I'll go to the next question. You guys, by the time you guys just key in. All right, now coming back, next question is, retention by the company is 20 and dividend paid by the company is 10, then what would be the PAT, profits after tax or earnings after tax? Guys, understand what is meant by retention? All right. Yes, Eva. All right, understood. Okay, so you find, since you only asked, you're finding it useful, Eva. Let me know if you're finding it useful. All right, coming back now. Retention means what? Guys, understand. If I earn 10 rupees today, if I earn 10 rupees for this year, now the company has all the right to decide how much we can give it to the shareholders and how much we can keep it for the further business. Guys, it's not that if you do a business, say for example, you invested 1 lakh rupees, you started a business, and in the year end you are just verifying your accounts. Okay, I did all these things, blah 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 blah, and you are arriving, okay, 10,000 rupees profit I got. Now what you will do with the 10,000 rupees? That's the question. Whether you will take the 10,000 and you will go back, you will put it in your pocket, or you will further invest in the business. Youth said that no, I will further invest in the business. Why should take this 10,000 outside? Let it remain in the business. I will use it for further purchases, further developments. I will use it. Now, when you retain, when you keep that surplus, whatever you have earned in the business, then that is called retention. That is called what? Retention. And that is nothing but reserves and surplus. Whatever the earnings that has been retained by the company, that will be shown under the head called reserve and surplus, because this retention word you will not see in your balance sheet. So that's why I'm saying, so retention means what? Retained earnings. The name is called retained. Out of 10 rupees I earned, how much I kept for the business purposes, that is called retained earnings. That will be going and sitting under the head called reserves and surplus. Okay, ma'am, out of the 10 rupees, I took 3 rupees out for my purposes and 7 rupees I just put it in the business. Now what will happen? 7 rupees would be retained earnings and 3 rupees, suppose if I am an individual, I will put it under drawings, or I will take it out for my purpose or drawings. But for company, what would you call this? You are giving this 3 rupees to your shareholders. Now, whatever sharing I can say, or whatever the distribution you are doing out of your profits to your shareholders, there is a name for that. What is it called? Dividend. What is it called? Dividend. Share of profits given to the shareholders is called dividend. You're getting it? So now 3 rupees I have shared, distributed as a dividend to my shareholders. Now guys, now the question is, what is your earnings after tax? Ma'am, why after tax they are asking, not before tax? Huh? Guys, understand, I told you that format in the beginning itself. Correct, no? Your P&L in the beginning itself. First revenue, total revenue minus all expenses, whatever is there, that is profit before tax. Forget about exceptional, extraordinary, all those, all those deferred tax, all those things you forget, okay? Profit before tax. Then tax you have to pay to the government. You have to pay to the government. So you will be paying out of, suppose I earned 10,000 rupees. If I am a corporate right now, I can pay at the rate of 22%. Yeah, 22 I can say. There are few sections where I will be paying at 22 and 25 also I can say. 22 I'll keep it. So 10,000 rupees is the profit. So 22% I will be paying. So which is nothing but 2,200 rupees tax I will pay. So baki amount is what? That is available in your hand, that you can do whatever you want. You keep it with you or you give it to your shareholders. You are getting it? So because tax is the government payout, you need to pay to the government. There is no other choice for you. So after whatever you have given to the government, whatever is available, that is the thing, final amount, you have it in your hand, that you can give it to your shareholders or you can keep it in your business. So now the question is, what is your PAT? So it is nothing but how much ever I retained in the business and how much ever I have paid to my shareholders. If I put together, that would be my PAT. So 20 rupees is the retention, 10 rupees is the dividend. So 20 plus 10, that would be 30. 30 would be the answer. You are getting it? Some people will ask, ma'am, provision will be coming in, ma'am. That would be coming. Guys, understand, all provisions will be before tax. After everything, final figure, you will be paying taxes. After that, whatever you have, once the tax is done, whatever is available, that is available for the shareholders. In that, bifurcation would be there. Preference, equity. So first would be preference. After preference dividend, whatever is available, that is available for the company and for the equity shareholders. You are getting it? Yes. Next one. Excel Limited reissued forfeited shares. I hope you guys would have heard of all these things. This one is related to your issue of shares. This questions, whatever I have given in this page, these questions related to your chapter called, there is one chapter that is called issue of shares, bonus, right, all those things are there now. There these questions will come. This is basic question. Okay, it is not related to bonus, it is not related to rights, this one, but it is related to issue of shares, normal shares. You're getting it? Now, forfeit means what? Guys, understand, whenever a company issue shares, and they'll ask you to pay money. Okay, in that what will happen? Suppose the total value of the share is say 10 rupees. Okay, now company has asked you to pay 10. There will be sometimes some company will say you have to pay at a stretch. Few companies will give you like an installment. So that is called first call, second call, like that. Now, what happened? You paid 7 rupees or, you paid some amount. 10 rupees they asked, but you paid 6 rupees or 8 rupees. You paid. You couldn't pay the baki amount. The company asked you. There are procedures. They have to follow certain procedures. They ask you. Yeah, forfeited share is not fully paid up. It is not fully paid up. Forfeited shares mean the shares which are taken back by the company in case the shareholder default in his payment. Please understand that. Yeah, it is not that fully paid up. Got that? So now what will happen? The company will say that, Baba, I asked you, you didn't pay. So I am taking back, I am cancelling your membership. I'm cancelling your membership. Now company will share the notice and they will take back the shares whatever allotted to that fellow. They will take back. That is called forfeited shares. The company has all the right to take back the shares from the defaulted shareholder, and they will cancel they will strike his name from the register of members. Ma'am, would they give back that 8 rupees whatever he has paid? Nothing. No, they will not. Please understand, they will not give back. You're getting it? Now, so now what they are doing is excellent the question. This is the entire forfeiture, because whatever the amount they receive, that is company ka fund, and that will be going to the forfeiture account. They will create one separate account called forfeiture account. In that, it will be treated as a profit, and it will be not profit exactly. It is received by the company, so it will be in the credit. Now what happens? So these shares are taken back. Now I will be finding new buyer. It is like same thing, guys. One fellow purchased a car from you and he didn't pay, and you snatched that car. Okay. And then you are looking for the second buyer. The same way, the company will be looking for the second buyer, second subscriber. Now at that time, what happens? It's not that second buyer will not pay on the full value. Obviously, no. So now what they are doing, reissued the forfeited shares. Reissued, they are looking for the second buyer. Now they are saying to the second buyer, Baba, see, this is a forfeited shares and we are reissuing it. And the face value was 10 rupees, but we are issuing at 8 rupees. If you want, you can buy. You can buy at 8 rupees. Anybody interested, you come. Now guys, understand, I have a loss because face value is 10. But I'm issuing at 8 rupees. It's a discount. Correct, na? It is a discount. Then that loss on reissue will be, what will happen? Where will you charge that? Because in bank account, you will be receiving only 8 rupees. Share capital account will always be hitting with face value 10. So this both are not matching, no ma'am. In the first class you said everything will be equal, debit and credit, but here bank is 8, but credit share capital is 10. 2 rupees is somewhere it is hitting, no. That's a discount on the issue of shares. That's a loss. So where will you charge that loss? So remember, loss on reissue or the discount on reissue of forfeited shares will be debited to an account called forfeited account, share forfeiture account. It is a reserve created, and to that account you will be debiting it. You are getting it? So the answer would be debit share forfeiture account. You are getting it? Hope you guys are getting it. All right. Now coming back, ma'am, this journal entry, I don't know, ma'am. I don't know how you are telling this forfeiture. Nothing to worry. Next class, coming classes, we will be seeing all those things. What would be the journal entry? How I am passing this journal entry? How I am debiting this account? Everything we will study. Not to worry about it. You are getting it? Since this class you guys asked for MCQ, I have given. This is how it will be. So we will see what is the concept, how you debited, how you credited, we will see. Yeah. Next one. Upon issue of bonus shares, what will happen? This is what they have asked. CRR will be credited, general reserve will be credited, general reserve will be debited, revaluation will be credited, revaluation will be debited. Ma'am, what is it, ma'am? I'm not understanding the question only. What is it? Guys, this one you have to study with your Companies Act. You're getting it? This one you have to study with your Companies Act. Why? Because especially when I talk about bonus, buyback, these two things, even rights to Companies Act talks only about the compliance procedure. They won't talk about any accounting treatments there. But when it comes to bonus and when it comes to buyback, Companies Act have told certain things that you have to create certain reserves after buyback, and you have to maintain certain ratios. when it comes to bonus shares, you can issue only out of so and so reserves, not of all the reserves you have. So in that one point is you can issue out of general reserve, free reserves. General reserve is nothing but free reserve, and revaluation reserve cannot be touched only because it is not exactly a reserve. It is fictitious. It is fictitious in the sense revaluation is nothing but we will create when we will suppose I purchased a land in 1990 for 10,000. Today the land ka value is say 1 crore. So now that 90 lakhs I will increase that and I will park. Where will I park that 90? It is not literal profit to me. It is just I just wanted to reinstate my assets to the current value. I did that. So where it is not a literal profit I have earned. Until unless I have I am selling that asset, I will not be able to know what is my literal profit. Correct? No? So this is just a revaluation. So that excess incremental value that I will park it in one reserve called revaluation. So this is notional. This is notional. Notional means it is not real. It is not realized in cash. Please understand that. So those reserves and all I cannot use. There are certain rules which companies that have told. So here they said that bonus shares can be issued out of free reserves. So your general reserve will be debited. So the answer is general reserve will be debited. You are getting it? Guys, with that, I'll wind up today's class. If you have any questions though, you put me here. I have still 5 more questions to go. I don't think I can complete because it's just 5 minutes to go. I cannot finish that question. Okay. If you have anything, let me know or we'll meet on Friday. I'll complete these 5 questions on Friday and then I'll go with further topics. You have any questions, guys? If you have any questions, just put me here. I think there is a time lag in my lecture, I guess. Maybe something happened, internet issues or something. I'm not sure. Oliveboard classes timing is clashing. What was that? I don't understand. What is it? Which classes? This is also OB only, no? I mean Oliveboard only, no? So what was it? Which class you are getting clashed up? Which subject I meant to ask? Because this we planned in such a fashion that it should not be clashing. How? Which class you are getting? Quantity 8 to 9:30. Come 1.5 hours. Mayank sir. Okay, I'll talk to them. I am not aware because when I asked, they said that it was planned that it is not impacting the other sessions. Okay, because I have one more classes that is on when it would be on Wednesday and Fridays. That is another class. This one YouTube class is on live classes on Tuesdays and Thursdays. That's why we kept it on 9 to 10. Even I asked for 8, but they said it is on another class. Another session is there on that time. Let me check with the team. Okay, let me check with the team. I'll update you. Next class is on today's Tuesday. No, Thursday. Next class is on Thursday. I'll update you. Same timing, 9 to 10. I'll just check with them. I'll ask them to update. Okay. See you on the next class. Thank you guys. Have a great day. Tomorrow. Bye-bye. Good night.